All right, and here we are. We are back in our trade, and what I've done here is just put in a bit of text that we were short on this particular bar from 1.32832, and the market traveled down. We had a stop placed up here, right at this level, and then once the market traveled down and closed down here, we moved our stop down here to break even. Okay. Now you'll see that the market did not do much in the up or down direction, and it stalled out, interestingly enough. And I'm saying stalled out because the open here, as you can see, is virtually the same as the close. Okay, so whatever downside momentum we had was slowing at that time. Now obviously it's easy for me to say that, as hindsight is 2020, but as you can see, that is what happened. Now interestingly enough, the market opened and traveled up and hit our break-even stop. So we did break even, and there was enough room we had set up in the stop to cover the spread. So it is actually a break-even stop. So we're out. There is no loss of funds in that trade, and you can see what happens. It goes up, it penetrates the area, comes back down. Okay, so had we not had the stop there, you can say, okay, shoulda, coulda, woulda is very popular in trading. Had we not had the stop there, we'd still be short and we'd still be in a profit. Yes, of course. Now if we didn't have that there, and had left it up here, it could have gone up here, we could be in a loss. So 6 of one, half a dozen of the other. We chose to, for the purposes of this particular trade, to place a stop and break even. So now we are no longer in a trade, and we are looking to take a trade. Now here's something additional that's interesting to note, is that the market goes up, penetrates that level, hits our stop, takes us out, we're flat now, and flat means we have no open positions whatsoever. Okay, so we go back down here, and what we'll do is, we could have looked at placing a bit of a different type of stop, and that is only if it closed above the break-even point, not just penetrated. Okay, so the closing price is important. This is where the market settles after all of the sessions that the euro US dollar goes through. Okay, so the close is particularly important, and you look at the closing prices. Okay, look at the closing prices here. These are all pretty much together, so perhaps there's this is the start of a consolidation of some type, but definitely we can see that the downside momentum has slowed. Okay, initially we're moving down. We move down from here, a lower low. Okay, then we move down from here, lower low, lower high. Then we move down from here, lower low, but no lower high. We move over to here, and we don't have a high that's lower. Obviously, we've gone into here and made a new high from the previous day, from the previous 2 days actually. Okay, so there is a new high, even though it did reverse and come down. So what we're going to do is we're going to look for an opportunity to enter into an additional trade, and this is what we're going to do. Something very simple. We are going to take an additional horizontal line, and it's going to be right down here, as you may have guessed, and we are going to sell the market if it closes below this particular horizontal line right here. Yeah, that's right. We're going to sell the market, and this is just based upon some simple horizontal lines, and you may look at it and think these are the worst possible places to place the lines, because these are psychological points for all traders. Everything's even, so this is 100 pips apart. But you know what? We're going to do this anyway, because again, this is an experiment for the purposes of illustration. So what I'll do is I will place a horizontal line down here to indicate that this is where we'd be interested in selling. Okay, we're back, and we can see that we're there at our horizontal line, and there we are, horizontal line at 1.3200. And what we're going to do is we're going to sell if it closes below here. Okay, if it closes below here, and conversely, we're going to buy if we get the close above there on the next open. We'll be buying. So again, I am very happy with the way this trade turned out, because what it does is it, rather than so many of the other potential videos you probably had an opportunity to look at that were showing winning trade after winning trade after winning trade, in hindsight, this is real time. Okay, so what we've done on our first trade is break even. You can put our, where we were short from, because I'm going to remove this, and it's a valuable lesson, understanding that not every trade is a winner. Break even is a good thing from the standpoint of the preservation of capital. Okay, so, and I know this particular point, I'm really glad to see this, because this is something that could be very disappointing, to see the market go back up and stop you out and then go back in the direction that you wanted and could be profiting from at this time. But this is valuable to see that it doesn't, the market doesn't dance to our tune. We essentially must dance to the tune of the market, and we'll have plenty of opportunities for profit in the future. So what I'm going to do now is we're going to look for an opportunity to enter into a trade on either side of either of these two horizontal lines. I'm going to remove this because this trade's done. I'm going to remove this as well, and we'll see you in our very next video segment.